Hi everyone. So today we're going to be looking at the statement of cash flows. So a statement of cash flows shows the cash moving into a business and the cash moving out, and we can split it into three. There are three types of cash flow: operating, investing, and financing. So operating is to do with your current assets and your current liabilities, and it's to do with your general operations or trading of the business. Investing activities are to do with fixed assets and non-current assets, and I remember they're to do with debit balances. On the other hand, financing activities are to do with liabilities, long-term liabilities or equity, so they're to do with credit balances. So operating activities are to do with your normal day-to-day trading. So if you're a candy shop, it would be to do with the sales of candy bars and the associated expenses. We also include in operating activity interest payments and corporation tax payments. And we saw operating activities are to do with movements in trade debtors, trade creditors, prepayments, accruals, and inventory, and other balances. But these balances are associated with your normal expenditure and your revenue and your income or revenue. Investing activities are to do with purchase. So we said it's to do with fixed assets. So it's to do, for example, it's where the company is the investor. So purchasing and selling fixed assets is an example, like machinery or shares or loans. We also include in that, if they're cash flows, investment income receipts. So dividend income, where if the company's a shareholder, interest income if the company's a bondholder. So these income streams don't relate to normal operations. Say if you're a candy shop, your interest income and dividend income is something you're doing on the side. It's not to do with your main business. So financing activities, as we said, financing is about funding. It's where other parties are investing in you. So on one side we have equity, so the owners of the business, so they're injecting money in, but they're also drawing money out. So if those are cash flows, those need to be shown. Also as well, for your loan holders, they're giving you money, you're borrowing from them, but you're also repaying them as well, so those cash flows need to be shown as well. Okay, so basically to summarize, operating cash flows plus investing cash flows plus financing cash flows, those are the three cash flows. They will tell you your cash increase or decrease, your movement in cash during the period. We then add this to the beginning cash balance, and that gives us the final cash balance. And obviously the final cash balance, a quick check is to see that it agrees back to the statement of financial position, and your opening cash balance has to agree back to the initial cash balance. Just a quick thing here, I just wanted to say as well that the cash flow statement, a way to think about it is you're subtracting a balance sheet from one year with the balance sheet from another year. But we'll maybe cover that in more detail. So I've got an example of a cash flow statement to show you the different headings. So we have cash flows from operating activities, and we have the net cash generated. We then have cash flows from investing activities and net cash from investing activities. And then we have net cash used in financing activities, and we have there. And 1 plus 2 plus 3 gives us the movement in cash. We add that to the cash that will be opening at the beginning of the year, and that gives us our final cash. What else did I want to say? I wanted to say as well that to get to our net cash from operating activities here, we have to, the profit figure, we start from the profit for the year or a relevant figure, and we adjust it to get to this figure here. And depreciation, investments, these are all non-cash flow items, but we'll cover this in more detail in the next presentation. For cash flows from investing activities, purchase of fixed assets, investments, interest, these are all cash flows, okay? Actual cash flows. If you're not showing cash flows, you're doing the statement wrong. So these are examples that we covered in the previous slides for investing activities, like purchase of fixed assets. Financing activities, as we said, is to do with equity and liability. So repayment of debt is a classic heading. dividends as a classic heading. Okay. So we're seeing a net increase of 220k, and that appears to be mainly coming from operating activities cash flow being greater than being greater than the outflows in 2 and 3. Okay. So, just to summarize, cash flows has 3 subheadings: operating, which is to do with current assets and liabilities; investing, to do with fixed assets; and financing, to do with equities and liabilities. Okay, we're going to cover operating in more detail, but thanks for bearing with me.